Good afternoon, everyone, and welcome to the European crossover webinar. And we've seen, obviously, the big events happening with the cable. We did make that push up here towards 135, much further than I'd even thought we'd get. But you can see here we came, actually had this level in here from before. No telling how long ago from before. This 35.19, you can see that's exactly where they ended up going to. Looks like they went there right to the pip. I thought this is probably about as far as they were going to get, which was 34.25. But we can see here that they actually made it up here, right here to this level, 35.19. There we go. Before pairing back, most of the fireworks were done, and really after a few hours, we had an idea where we may go on and run out of gas. Or that the extent for them to push even higher would be rather limited. So, and then looking at a couple of the other pairs, another pair that we were interested in. Well, not only the guppy, which the guppy, this was just amazing. It almost made it, well, actually did make it to 48, but that was just amazing. Would not have thought this would have climbed that far. This one here. What was on the Sterling Odd? I thought this offered us the best opportunity. Remember, our target was 94. Well, intermediate target, if we got past 90.58, was going to be 94.07. I thought that might happen over 6 weeks, and this thing just, once it busted, made it literally within days or 10 days or so. And we had 94.28, but we exceeded those and actually clipped at 95 cents before pairing back, and we've come off quite a bit now. Especially with the strength of the odd. The one thing that I thought made it the most vulnerable, because look at the meteoric rise we had from earlier in the day, but one of the reasons it fell apart prior was it on the strength of the Aussie. So, we were holding up pretty well, and always somebody just fade. We come back so strong. I thought this pair is really rather quite vulnerable. And thought I was surprised it even made it up to 95 cents. And actually came up a second time here, only to, as I said, turn around and fell back here. Saw the euro dollar also with a pretty good little run here, just about making up here to 12.13. So nice little run, made it past our intermediate target, which was an intermediate move, which was the 1180. But I thought we might even make it up to 12.13. We did make it up to 12 and then kind of pull back a bit here. Dollar yen made it past this pivot, and finally is some, I guess you'd call it some supposed news. We'll find out what hell happens with the U.S. announcing a deal with China, but China hasn't responded. So, but I think they're just going to keep the administration stirring for a moment. I don't think they'll actually respond until well into the equity day. So we shall see how that all plays out. Let's go in and take a look at the economic data for the day. Excuse me. So a lot of good little data here. Wholesale inventories for Germany were out at 2 a.m. Eastern, and I'm on Central. And then at 3 a.m. Eastern, which is 2 p.m. Central, that's why we're showing it here, is a Spanish CPI came out pretty much in line. And then, of course, we had Italian industrial orders that were just released as we came on air. Now, not until 8:30 Eastern. Now, this is rather unusual. Oh, okay. For a minute, I thought I was showing UK data. But we do have import and export as well as retail sales prices in the States coming out. That's going to be at 8:30 Eastern, so potential for the market to move a little bit. But obviously, the real big news is going to come out when we get to the cash equity open. We'll see potential for the market to move a bit further. I'm talking about the S&Ps. So once again, import, export, as well as retail sales out. And let's go on and get into the news. The pound soars as Johnson scores a landslide British election win. The pound surged more than 2% on Thursday as Prime Minister Boris Johnson's Conservative Party won a resounding election victory that that markets believe makes an orderly British exit from the European Union all but certain. Sterling reached a 19-month high versus the dollar and its strongest levels against the euro since shortly after 2016 Brexit referendum. It's jumped as much as 2.5% versus the dollar, put on course for its biggest one-day gain in nearly 3 years. A remarkable gain for a currency that has become extremely volatile since the referendum. Chastened by 3.5 years of political instability, in Britain, investors seized on the expected conservative landslide, believe it will enable Johnson to deliver Brexit on January 31st. That would end immediate fears about the UK crashing out of the EU. Just as Boris Johnson was desperately seeking his majority, this result would give the markets their ultimate wish. Clarity, said Dean Turner. Johnson's Conservatives were on course to win a comfortable majority of more than 70 seats in the 650-seat parliament in what would be the biggest Conservative national election win since Margaret Thatcher's 1987 triumph. The Conservatives claimed a string of Leave-supporting seats from Labour in the opposition party's heartlands of the Wales and Northern England. The pound rocketed 2.5% higher to 135.16, its highest since May of 2018, in the immediate aftermath of the exit polls. It later settled at 34.72, 2.3% on the day. Against the euro, the sterling rose as high as 82.80 pence, up more than 2% on the day, leaving the pound at the levels last seen in July 2016. Markets will start focusing on the longer-term outlook of what a future trade relationship with the EU will look like, and the pound's gains will be capped in the 35 to 37 area, said Joel Kruger. Johnson faces the daunting task of negotiating a trade agreement with the EU, possibly in just 11 months, while all negotiating another trade deal with the U.S. President Trump. The outcome of the negotiations will shape the future of Britain's economy. After January 31st, Britain will enter a transition period, which will negotiate a new relationship with the remaining 27 EU states. Peter Kensler of FX Strategy said the pound's gains were a relief rally that the Labour Party under Jeremy Corbyn was unlikely to win and reflected the size of the majority of the Conservatives looked to claim. Corbyn's nationalization plans have weighed on the UK domestic stocks, and energy and transport shares were tipped to climb when the stock exchange opens on Friday. Yields on British government bonds are set to rise as investors buy into riskier assets like stocks. Starting traders at banks and investment firms worked through the night with the bulk of parliamentary seats declared before 5 GMT. Broader global markets gained on Friday, boosted by both the likely UK election and reports of a last gasp trade deal that had been averted with the U.S. tariffs on China. Political uncertainty has dogged the performance of the British assets, blah, blah, blah. Okay, so we already know all that stuff. We'll go on and move on. Chinese yuan surges and end of 1 month high on trade deal optimism. China's yuan rallied to 4.5 month high against the US dollar, and the nation's share market was equally buoyant on news that the US and China had agreed to reduce existing tariffs and delay new ones set to take effect this weekend. The United States has reached a phase one trade deal in principle with China. A source briefed on talks between the two nations told Reuters on Thursday, and that a statement from the White House was expected soon. But the absence of an official confirmation of a deal from either side raised questions over whether the world's two biggest economies can secure a truce in the bitter trade war before a new round of tit-for-tat tariffs. Investors were bold enough to bet on a positive outcome of the negotiations. The benchmark Shanghai managed to rise past the 3,000 level as sentiment improves. Foreign investors were net purchases of the A shares. Let's see. And lastly, Eurozone bond yields rise on trade deal hopes and Brexit clarity. Eurozone bond yields rose on Friday as the U.S. and China appeared close to a trade deal and a thumping British Conservative election. Progress in resolving the two key political risks have hurt global economic growth and anchored yields on safe haven bonds in negative territory, boosted investors' appetite for riskier assets across the market. Most 10-year yields, which move inversely to their underlying price, were up 3 basis points after a steeper rise in earlier trading. Washington will suspend some tariffs on Chinese goods and cut others in return for Beijing buying double the U.S. farm goods it bought before trade tensions started, U.S. sources said on Thursday. In Britain, Prime Minister Boris Johnson's Conservative Party won a resounding election victory on Friday that will allow him to pass in a withdrawal agreement. The mix between the prospect of trade between China and the U.S. also cleared the majority of Tories in the U.K. I would say that they are a perfect ingredient this morning for this risk-on mood. So there we go. Out with the news, and we'll move on to the analysis. Well, we saw the euro. One of the intermediate targets we were looking for, because remember we'd been trading in such a very tight range, was if we could get past 1109, we'd be looking for a move, an intermediate move to 1080, and potentially we could eventually get to 1213. Well, we obviously clipped that within 1 day. We actually came back and tagged the breakout of right here at 1109, which was our key level on the way up to open the door for us to rally higher. Obviously, we saw the euro come under pressure yesterday and actually make a move back down to the 1109 post the Fed, where we saw the euro rally. Obviously, with the British election, the trade deal got the euro sparking higher. We made it past the 1180. You can see that here, and almost made it up to 1213, which is going to be today's resistance. We're kind of chugging along here with the euro now. See here, we made it to the 1180 overnight. Resistance now will be 1213. You can see that clearly, and you can see we'll be revising our upside from the downside here. And let's see. Coming right there. You can see that coming right across there. You see that? That should be right there. So be 1130. Let's go move into the cable. Well, this has been already a pretty good move. You can see it continues to drip lower here. So we've went even further than what I would have expected here. At 35.19, that was one heck of a move. This obviously got past this projection here. Move that. Now, how far we pull back? Well, immediate support is going to come in here at 33.40. We're not that far away from it. And let's take a look for the upside. Right there's going to be 34.28. And boy, we're still continuing to fall. Look at this. 34.28. And let's go move into the Aussie dollar. We've already had a pretty nice little run here. We almost made it up here to 69.44. That is going to be the resistance here. Okay, and on the downside, we're looking for 69.02. Just hearing over the squawk is it, which they had mentioned, is Chinese media still has yet to mention anything about the trade deal. And that was my thinking. I had tweeted out was when it had been mentioned, I thought, they're going to keep the administration stirring. My guess is they won't even mention anything until well into the equity day, basically to leave the administration hanging. So they haven't even mentioned anything about any type of a trade deal or phase one deal or anything being reached. Upside, as I mentioned, is going to be 69.44. And let's go move into the Kiwi. Well, we have really outdone ourselves on this Kiwi. I mean, the Kiwi has. Look at this move. I mean, we have reached every potential level that we could on here, reasonably speaking. I mean, holy smokes. They made it to the 66.32. That's still going to remain resistance here. You can see here we made it right there. And on the downside, right there, which is going to be 65.97 now, and doesn't give you much of a pullback. Just right in here, coming right across here, just a little bit more volume, which is going to be 65.93. Let's actually give a little bit more room to pull back. That comes in right at 69. Right there, 68.98. And no changes here in the dollar CAD. You can see here it's remained weak, and certainly the downside target still remains, and which is also bias track support, or you would call them a logical target, which is going to be 31.36. You can see here. Upside 32.05. That might be a stretch, but we'll stick with that 32.05, which was previously support, now becomes resistance. And let's go and move on to the peso. This has continued to drip off. We would look for support at 1908 with a potential move all the way down to 1902. Well, we made it to 1902, and we've even gotten past that. But support today is going to be 1898, and I don't really know what it's going to do at this point. Maybe we get a little bit of a bounce from here, but we've already pushed the 1902. We're actually working a little bit high right now, but it's 1898. Although we looked for a potential move to 1902 and we had support for 1908, resistance now is going to be 1912. A lot of these moves we've had, some of these moves have been, although it hasn't been too bad here, but some of these moves have been so exaggerated, there's just not a whole lot. We're going to have to see how this thing plays itself out. These moves over what we've had essentially is, like I said, the Fed, the ECB, the UK election, the China news now. So a lot of events that have stretched some of these moves. So we'll have to let these moves digest and see where we go from there. Let's go move in now to the dollar yen. Well, the dollar yen did get above the 927 pivot here, and we're looking at the next move here is at 977. When you think about how far the S&Ps have rallied, the dollar yen is still has remained well contained, and we were pressing up against 927 yesterday, but with the announcement, obviously we pushed higher, and the key has been 954, and you can see that right here. Right there. It's going to be a big deal if we were able to get above that 954. And currently we are right now. We'll see how this thing plays out. The only thing that I think that helps push it a little bit higher, it keeps that bid, is because it's a Friday and you would see just a little bit further short coverage. I mean, if you were of the ilk to be bearish again, despite even getting above the pivot, which would call it into question, you're going to go and wait. You can say, well, I'm not going to go and short it now. And now we're actually above 954. That's going to be the key if we can remain above 954 by the close. Resistance right now is going to be 977. It's held up very well. I mean, as far as, we'll actually give it a little bit of room. You see right here, that level right there? That'll put it up to 989. Right there. Some nice touches, but we're so close anyway. You'd think it would ring on the bid. So we'll go with 9 right there. 989. See if they stretch it a little bit further. Downside support, well, it's going to be the pivot. And let's go move into the cash dollar index. Well, this thing really came under some kind of pressure last night or in the evening on the chant between getting hit between the China news deal and the British election. We really came under some kind of pressure. Previously, we had 96.87. We got there and then some. Looked like we might even make a move all the way down here to 96.50. That's still always a potential for today. We'll actually just go with 96.50. Although I think most of the fireworks are over on this thing. You've even seen the cable coming off quite a bit. Let's go right there with that. 96.66 right there. That's actually 96.63. And on the upside, $97.05. And let's go on and move into the cross rates. We've had a pretty good little run here in this Kiwi. This thing is, look at that, it's even it's even blown past this this zone that we had. Wow, impressive. Past the 78%. been some kind of a move here. Well, we'll go with this move here. I don't think we'll make it up there, but look, it's been so impressive. It has made it. We'll go with 72.83 on the upside for the Kiwi yen. And I don't know why that didn't get updated. Let's go and fix this cable right now. Oh, that's right. It was 34.28. Doggone it. Support's right there. Right there. 33.07. Let's go move into the euro yen. Wow, we just about tagged it right there, which is 22.64, and that'll be our resistance. Some of these pairs are really starting to wake up now after their long slumber. Their support right there is going to be 22.11. It seems rather close, but the thing is that being a Friday, probably going to have just people, exiting, covering positions. So I would expect the bid to stay. Let's move on to the euro on. This finally made it back down to 60.95. Remember, as I was trying to figure out what this thing wanted to do, it finally made it there to 60.95. So that's going to be our downside right there, 60.95. Just when I looked like it wasn't going to go down there, it actually did. We've seen a nice rebound, and the rebound is going to be right there, 61.76. Let's go and move on to the Euro Kiwi. Well, we've basically rotated in this position after this stark sell-off. We eventually, not only did we get past 69.42, we all made it all the way down to 68.06, and we thought we would just rotate between here, which we did. We exceeded a little bit here on this day, but we paired back and we're well within this range. So downside support, you know, I don't think it would get down to 68.6. It'd be right there on that open low here, which was that's where they went to, which is 68.33. Upside 69.42. And we finally got the ASEAN moving higher. Obviously, with the China trade news deal, I mean, China still hasn't mentioned anything. But resistance, if we're going to push up higher, we actually have some already right there. You can see we actually tagged it, 75.97. If we can push a little bit higher, right there. Well, we'll go with that, 76.19. I guess we'll get an extra boost if China finally does mention something. And on the downside, 75.31. Right back test here. And with that, let's go and move into the guppy. This has been an impressive move because it's just been a steady move. But to take out all these levels is very impressive. Almost making it all the way to almost right here. We actually did challenge 48. So resistance now, we have 47.42. Let's go in and take a closer look. $47.31. And support here is going to be 46.38. And let's go move into the sterling node. This has been a strong move, but one that we've talked about this in Asia, that we felt that it was susceptible because of the way the market already pulled off. And then we rallied up 500 pips. Actually, ultimately, we ended up rallying even further than that. So we saw quite the move. Resistance now. Would be 94.18. Support right there. We almost made it there. Let's give it a little bit higher right there. 93.24. We've already rolled into the March, but you can see here we're still holding up close to these highs here in this S&Ps. Way up here in the stratosphere. We're not going to get a move until once the cash equity market opens 8:30 Eastern, and we'll see what we do at that point. China still hasn't mentioned anything. They said it's already, the evening's already upon us there, and no mention of any trade deal, phase one deal agreement. As I mentioned, I think that they're just going to keep the administration stirring. I think that if they're going to mention anything, it won't be till later in the trading day. So we'll see how the cash market wants to react, but they believe everything is. And I know the administration is supposed to make their own announcement. Bonds, they've really taken some kind of a shellacking. And just got absolutely destroyed. We'd seen that big move when we saw the S&Ps going and come off, and all the way up here to 60.16 or 60.14, only to see it come back and give all that move back, and then some. We saw a rally back up, and then when they announced, look like there may not be a deal or whatever the case is, the deal's going to go on and come on, then we really saw this market really come off and continue its drop. Crude oil still hasn't taken out $60, but it's actually been trading in a relatively tight range overall, surprisingly after the moves that we've seen here. You can see that. It's actually trading after what we saw, which was some of these crazy moves where the market was just up and down, up and down, up and down. We've kept it here, but we haven't been able to take out $60 yet. I'm surprised to a certain extent in light of where the S&Ps went. So we'll see whether we finally start to trade to might refer to as a bit of normalcy now after what we had recently been seeing here. Gold had gone and taken, we mentioned that yesterday afterwards with the announcement and Trump saying China deal was upon us. We'd gone up here to 1490s and we really got shellacked pretty good. Very well, actually. I was surprised gold had been holding that well, considering that the bonds had already been selling off at the time and were already paring back. And but we did go on and see that continue to follow through. Some decent support below 1470. You can see here the market has rallied a little bit higher on there, even despite the SPUs rallying to new highs. So that market, I think, like I said, just crushed a lot of people that may have got long and may have hung on. But that's all that we have for today. Thanks for joining us here on the European crossover webinar. I'll get the buy chart posted and we'll see you in the chat room.